Ever wondered why that three-digit number called credit score holds so much power over your financial life? Well, let's unravel this mystery together, shall we? Think of your credit score as your financial reputation. It's a numerical representation of your reliability as a borrower. This score ranges from 300 to 850. The higher the score, the more reliable you appear to lenders. So, who's interested in peeping at your credit score? Well, it's not just banks and credit card companies. Landlords, utility companies, and even potential employers may want a sneak peek too. They use this score to gauge your financial responsibility. Now let's talk about what's cooking in your credit report. The main dish that whips up your credit score. It's a detailed record of your credit history, encompassing your payment punctuality, the amount you owe, the length of your credit history, the types of credit you have, and your recent credit activities. Still with me? Great, let's spice things up a bit. Your credit score isn't just a number. It's a key that unlocks a world of possibilities. Want that dream car or house? A good credit score can get you a favorable interest rate. On the flip side, a bad score might mean higher interest rates or even loan rejections, and we don't want that, do we? So how can you ensure your score is more of a friend than a foe? Stick with us as we share a simple recipe to manage and master your credit score. Trust me, it's easier than making a souffle. Now that we've demystified the credit score, let's delve into how you can master it. And remember, don't forget to hit the subscribe button for more savvy financial tips. A credit score might seem complex, but it actually boils down to two main factors: payment history and credit utilization. Imagine your credit score as a delicious cake recipe. You need various ingredients in specific proportions to bake the perfect cake. Similarly, your credit score recipe has two main ingredients: payment history and credit utilization. First, let's talk about the payment history. It's like the flour in your cake. It forms the base of your credit score. This means how consistently and punctually you've been paying your bills and dues over time. Creditors love to see a person who sticks to the payment deadlines. It shows you're responsible and reliable. So if you want to whip up a good credit score, make sure you're paying your bills on time, every time. Now, let's move on to the second ingredient: credit utilization. Think of it as the sugar in your cake. You don't want too much of it. Credit utilization is the ratio of your credit card balances to your credit limits. In simpler terms, it's how much of your available credit you're using. The lower the ratio, the sweeter it is for your credit score. As a rule of thumb, try to keep your credit utilization under 30%. It demonstrates to potential lenders that you're not overly dependent on credit. Together, these two factors, payment history and credit utilization, make up about 2/3 of your credit score recipe. So if you're looking to bake the perfect credit score, focus on these two ingredients. Pay your bills on time and keep your credit utilization low. Mastering these two factors can put you on the path to an excellent credit score, but wait, there's more to it. While payment history and credit utilization are the heavy hitters, there are other players in the credit score game. Now let's meet these unsung heroes that can make or break your credit score. First up, we have the types of credit accounts. This is a fancy way of saying variety is the spice of life, or in this case, the spice of your credit score. Having different types of credit, like a mix of credit cards, mortgages, or car loans, shows lenders that you can handle different kinds of credit responsibly. So diversify your credit landscape, but remember, don't bite off more than you can chew. Next, we have the average age of accounts. Think of this as the wisdom factor. The longer you've had your accounts open, the more seasoned you appear to lenders. It's like a badge of credit honor. So hold on to those old accounts. They're giving your credit score a vintage charm. Then there are recent credit applications. Applying for new credit can cause a temporary dip in your score. It's like the credit score version of a proceed with caution sign. Try to limit these applications and only apply for new credit when you really need it. Lastly, there's the total balances and debt. This one's straightforward. The less debt you have, the better your score. It's like cleaning up after a party. The sooner you do it, the better you'll feel. So, make a plan to pay down your debt and stick to it. Now, these factors might not be the star players, but they're just as important in the grand scheme of things. Like the supporting cast in a blockbuster movie, they add depth and complexity to your overall credit profile. Managing these factors might seem like a juggling act, but with a little bit of discipline and a dash of strategy, you can keep them all in balance. Remember, every bit helps in the credit score game. Keeping these factors in check can give your credit score a healthy boost. But what if there are negatives on your credit report? Stay tuned to find out. Mistakes happen and they can leave a stain on your credit report. But don't despair. there's a way out. Let's talk about how to identify and dispute errors on your credit report. First off, you need to get a copy of your credit report. It's like a report card of your financial health. Once you have it, go through it with a fine-tooth comb. Look for errors or inaccuracies like payments marked late when you paid on time or accounts you don't recognize. If you find something off, don't hesitate to dispute it. Write to the credit bureau, provide evidence, and ask for a correction. Remember, it's your right to have accurate information on your credit report. Now, what if the negatives on your report are legitimate? Maybe you missed a few payments or defaulted on a loan. It's going to be a bit tougher, but it's not the end of the world. Start by getting back on track with your payments. Consistency is key here. If you can, try to negotiate with your creditors. Sometimes they might agree to remove the negative mark in exchange for payment. Once you've addressed the negatives, it's time to rebuild your credit. Start small. A secured credit card or a credit builder loan can be a good starting point. These products allow you to show you can handle credit responsibly without the risk of getting in over your head. Make sure you make all your payments on time and keep your credit utilization low. Remember, rebuilding credit isn't a sprint, it's a marathon. It requires patience, perseverance, and a whole lot of discipline. Make a budget and stick to it. And most importantly, monitor your credit regularly. Keeping an eye on your credit score will help you understand how your financial behaviors affect it and allow you to make adjustments as needed. With patience and discipline, you can scrub those negatives off your credit report and rebuild your credit. But the journey doesn't end there. Mastering your credit score is not a one-time event. It's a lifelong journey. Just as a ship's captain continually monitors the horizon and adjusts the course, you too must keep a vigilant eye on your credit score and make necessary adjustments. To keep your credit score at its best, you need to regularly check your credit reports for errors. You might be surprised how often inaccuracies creep in, like erroneous late payments or even accounts that don't belong to you. These errors can drag down your score, and it's up to you to spot and dispute them. It's like being a detective on your own case, ensuring your financial reputation remains spotless. Next, let's talk about the importance of monitoring your credit scores. Think of it as your financial health checkup. Regular monitoring gives you an understanding of how your financial decisions affect your score, and it can also alert you to sudden changes that might indicate identity theft or fraud. It's like having a financial bodyguard always ready to alert you of any potential dangers. Now, maintaining a good credit score over the long term is like tending a garden. You need to nurture it. Make sure it gets the right amount of sunlight, water, and nutrients. In the world of credit scores, this means paying your bills on time, keeping your credit utilization low, not opening too many new accounts too quickly, and keeping your old accounts open. Remember, your credit score is not set in stone. It is a living, breathing thing that can grow and improve with time and proper care. It's not about quick fixes or overnight transformations, but consistent, responsible financial behavior. So, let's recap. To monitor and maintain your credit score, you need to regularly check your credit reports for errors, monitor your credit scores, pay your bills on time, keep your credit utilization low, and manage your credit accounts wisely. It's a simple recipe, but it requires commitment and discipline. Mastering your credit score is like mastering an art. It requires knowledge, skill, and constant practice. So keep practicing and remember to subscribe for more financial wisdom.